Hi, I'm Dennis Murphy from Independence Business Consulting. This is another in a series of our interviews with an expert. I'm sitting here with Mark Abbruzzese from NextBridge Funding. He's going to tell you a little bit about himself, and we're going to talk about private money lending. It is a category that we deal with quite a bit. It oftentimes is the difference between getting a deal done and not getting a deal done. So we're going to go over some topics, some more stories, some things Mark and I have done together, and hopefully educate anybody who watches this on how private money lending works, why you might need it, some costs, and really all the ins and outs.
I've been a full-time real estate investor for over 15 years, and I started in the business fixing and flipping houses, as a lot of people do.
Yeah.
I've grown a rental portfolio of some single-family properties and apartment buildings, and ran that myself, managed it, fixed the properties up, leased them out, managed all the work that needed to be done. And during that process, I've always financed properties for people, seller financing, or a friend of mine that might need a little bit of money to finish a job. In 2018, I started NextBridge Funding and put all my time and attention to doing private money and private financing. And it's been a great success. Love the business.
Well, so let's talk a little bit about deals that you like to do, deals that you want to stay away from. Obviously, this is being filmed the end of September 2022, which I think we're going to look back in the next couple of years and say we're on the precipice of some difficult economic times. We've done deals together over the last couple of years. How do you think those deals are going to differ from the deals we do over the next couple of years? And again, kind of what are you looking for? What do you want to see?
Yeah. Well, I agree with you. I think things are going to change dramatically in the next 6 to 12 months. How much they change, we'll find out, but their change is coming. I'll start with deals that we don't like to do. Okay. Deals that are really challenging for us are properties that all the work is in the construction. So somebody buys a property for $100,000. It needs $300,000 or $400,000 worth of work. It's very hard for us to lean that and have a lot of equity in it. Since we're an asset-based lender, we're not looking at somebody's credit.
Right.
We're not looking at their debt to income. We're not doing that. We're really looking at the asset we're lending on. So those are a challenge. Other than that, we've done single-family residential properties, rentals, fix and flips. We've done some apartment buildings. We have done small strip centers. We've done warehouses, which we've done with you before. So any other deal where the deal makes financial sense, where there's enough equity in the asset for us to secure a loan and somebody to either sell it or refinance it at a later date, that's the kind of deal we want to look at.
So you're not opposed to if I say, hey, Mark, I've got somebody, he's got a package of three bedroom brick
Not at all.
ranches.
We've financed vacant land in Florida.
Okay.
We've financed a rental portfolio in Redford, Michigan. So that's not a problem. It could be one property, it could be 5 properties packaged together. We just did 3 duplexes side by side in Cocoa Beach, Florida that closed last month.
Okay.
And those are all short-term rentals somebody's using for Airbnb. And they needed to pay off an outstanding land contract. We financed that, and they're going to refinance out with a long-term lender.
Hopefully it was fully insured.
We'll find out.
All right, so it sounds like, because oftentimes private money lenders that I use have a niche, right? We like this, we want to stay on this end of the spectrum, we don't want to go to this end of the spectrum, and you know, in our discussions before, I think it's always been, bring me a deal that makes sense on any level, and we'll do it.
I think that's right. We like to look and evaluate deals. That's one of the things we do really well, is evaluating deals quickly and getting information back to your clients quickly. I would say for us, our niche is loans that are under $1.5 million.
Okay.
So if you've got a 10 or 15 or $20 million loan, that's going to be too big for us.
Okay.
But if you have something in that $1.5 million or less range, even if it's a $50,000 loan, we'll 100% take a look at that.
Okay. And IBC has options for those higher end loans as well. Mark, we deal with a lot and really enjoy working with them, but we do have multiple private money lenders that we can deal with. So Mark will always say, hey, no, it's out of my range, or don't like it, or whatever, great. And then I can go back out to the market and place it somewhere else. So let's talk about why private money. Why can't I just go into an institution and get it? So, and I'll let you kind of extrapolate on your process and the niche you fill. But what I found over the years is when I can't get somebody financed by a traditional means, they'll say, well, what if we do private money? Okay, but I always joke that the private money lender isn't just going to hand you a sack of money just because it's private money and it might be a little bit more expensive than institutional funding. There's still underwriting involved. They still want to get paid back. Sometimes the individual who's essentially coming out of his own pocket and lending you that money, he might scrutinize it more than the guy at the bank who, they have an actuary who says, yeah, we're going to lose so many loans are going to go bad. So it's not just, it's private money, they'll lend on anything. You want to speak to that a little bit?
Yeah, no, I agree, obviously.
That look tells me you've had that call a couple of times.
Yes, our biggest, when we're evaluating any deal, the biggest thing that we look at is risk. Right? The first thing is you got to get paid back.
Right.
Doesn't matter what you're charging, what fees are. If you're not going to get paid back, the whole deal is moot. We've been very fortunate that our foreclosure rate in the 4 years we've been doing this has been under 1%. So we really work hard to make sure we're making deals that work for everybody, not just us or not just the client, for both sides. To me, you come to private money because you need an answer and action quickly. I think a lot of people think private money is geared to somebody that has bad credit or hasn't filed their taxes or hasn't done those things. Like they cannot get financed at a bank. It's usually the opposite. It's somebody who could get financed at a bank or can, but needs to act quickly. They're up against a hard deadline. They have a contract that's coming due. They're buying out a partner. They want to write a cash offer on a property and not go through 60 or 90 days of underwriting from a bank to then get turned down because they made a deposit into their account for $1,000 that kicks everything back. So it's those reasons of, can we get this information in? Can we get you and your client an answer quickly? Our turnaround time for our cookie cutter loans is 24 or 48 hours. And then can we act on that? Our average loan closes in under 2 weeks. So if we talk to somebody today, within 2 weeks, we should have that loan closed. So if you need to act quickly, that's the main reason I think you want to talk to a private lender.
Well, and an example that I use when I'm explaining private money, kind of the classic example is somebody calls me up and says, I've got this 20-unit apartment building. It's half filled. We need to do some construction on it, whatever. It's in a great area, or maybe it's 3/4 filled. We have to redo a few units. So it's going to be, we're well on our way, but no institutional lender is going to lend this. So all I need is a 60% LTV. It's cash flowing, at that level, we're going to be okay, but I can't get institutional financing. And to your point, one of the big things is oftentimes my purchase agreement expires we'll get the call that, in 3 days, but we can negotiate that sometimes. But if I can just get this bridge and hence the name,
yes.
Next Bridge Funding, it's private money is often, it's synonymous with bridge funding. It gets you from where you're at to that institutional funding. So, hey, I'll lend you the money to acquire it. So we can stop the clock ticking on, oh my God, my PA is going to expire. Somebody else is in line to buy this thing. All right, let's get it under your control. Now let's look at what are you going to do to finish this off, to get it to full occupancy. All right, we're on board with that. We might even lend you some money on that. And then we're going to get to a point where you can take Mark out. I'll get you institutional financing at that point. So to that point, can you talk about maybe some different types of loans? We've done multiple different types of loans.
I was thinking about this
in
as
the
you were
past.
talking. I think the first loan that we ever looked at was this condo complex in Detroit. And the borrowers were solid people, had sold multiple condos, had good credit, had money. They were working with a bank who had given them a couple extensions on loans, didn't want to extend the loan any further. Not because they weren't paying their bills, not because they didn't know what they were doing, just because they had given them a couple extensions and they were done.
Right.
That's a private money loan. That's your ideal loan. Deals that we like, we're very, very good at fix and flip loans. We turn those over all the time. We're good at new construction loans for small commercial or residential. Good at cash out refinances or paying off land contracts. Anything, again, that has a hard stop against it, and need somebody to give you an answer quickly. Those are really good. And I always say, we try to use common sense underwriting. We're not looking to trip anybody up.
Right.
We're not looking to say, how can we not do this deal?
Well, let me interject. Sorry,
Sure.
I don't mean to interrupt, but this point keeps coming up in my mind. I've had private money lenders in the past say, hey, we're at a 50% loan to value. The best thing that could happen is they don't pay me back. I cash this thing out and I make a bunch of money. You have been the antithesis of that. You've always said, I don't want to take it back.
Yeah.
I get it that there might be more money, but that's not the way I want to do business. I want to lend, have a good experience on both sides, and then they come back or they tell a friend. That you really are a different mindset.
We've
than
been
a lot.
very fortunate that we've had a lot of repeat and a lot of referral business.
Right.
And I think that's because we try to do things the right way and make people happy. But I don't want to take any place back. It doesn't matter what the equity spread is.
Right.
And the 4 foreclosures we've had in the last 4 years have all been first payment defaults. So there've been somebody who has not made a payment.
Right.
Other than that, we've always been able to work a situation out. I could think of, we did a loan just before COVID hit, and the woman we lent money to had a commercial building. Half was a gym, the other half was a hair salon.
Ooh.
So as soon as March hit, she called me immediately to say, I'm out of business.
Right.
What can I do? And we worked with her, and we gave her an extension. She didn't make any payments for a few months. When she got back on her feet, she started making payments, and we worked through that situation. That's just part of life. I think one of the pluses of working with a private lender or a smaller lender is you can talk to the decision maker.
Right.
I mean, we're making the decisions in our office. We're not asking an underwriting department someplace else or having to follow a Fed guidelines rules of we can't do this or we can't do this. We're doing things that make sense. You're just making sense of loans. To me, that's the best part of the business.
Well, and I think that's a good point for anybody who's watching this and they found this video because they're looking for a private money loan. If you wouldn't do the deal, don't expect Mark or any other private money lender to do the deal. It sounds like very obvious advice, but it's, well, if A and B and C and D and E all fall into line, it's going to be perfect. That's never going to happen. It never happens. So again, you have to look at, and oftentimes if you call me, I vet all this stuff out first, and I'll tell you, well, let's get rid of some of these things. Let's make it so it makes more sense. Maybe even move on to another project. But if you wouldn't lend money on this, then why would somebody else? That really needs to be the first question you ask yourself. And why am I even attempting this transaction if I wouldn't lend money on it? And then if you say, yes, I would, and here's the reasons why, then you can have that logical conversation with Mark and say, here's why I think you should do it.
The phone call that we do get quite a bit is somebody who's looking for 100% financing and then 100% of the fix-up of a property. My answer is always, what do I need you for?
Right.
If I'm going to put up 100% of the money on everything, then I might as well just take the risk myself, fix up the property myself, and have the benefit or loss. If you're going to lend somebody money, they have to have some skin in the game.
Right.
And skin in the game is always, equity's fine, but you really want somebody to come out of their pocket with some cash. So they're serious about what they're doing and they'll pay you back. And that's why our foreclosures are almost non-existent.
Right. There has to be some pain for walking away.
Yes.
Right.
Because we don't want anybody under any circumstances to walk away. That's not what we want. We want people to be able to pay it and be successful. And as you said, I want them to come back and do another loan or refer me to somebody else.
And let's talk about fees and things. I don't want to get to, dig into exact numbers because those can change and they'll change with the market. But it makes me think about a couple of conversations that you and I have had about pricing. And I've given you examples of other people I've worked with over the years. And I always joke that they turn the borrower upside down and shake them out until every coin comes out of their pocket.
Yeah.
And the borrower says, okay, I'll do it. I have to do it because by doing this loan, it frees up so much more. The return on investment is well worth it.
Yeah.
But they're begrudgingly signing the documents, and then when it comes time to making the payment, they're always thinking about how they were taken advantage of. And then when it comes time to refer you or do another loan with the private money investor, nope. You take a different approach to that. And again, I just want to point some of the differences between you and the average lender.
The things that I see a lot of private money maybe a lot's not the right term, but I see private money lenders ask for, is they'll ask for guaranteed interest. So if they're doing a 6-month loan, they'll say, I want all 6 months interest, whether you keep the loan a month or 6 months, or they'll charge a termination fee. And we don't charge any of this.
Right.
We charge an origination fee when we do the loan. If you want to pay the loan off in a week or a month, or the full term of your loan, that's fine. I just think, again, it's common sense business. We need to make money, but we need it to be a good experience for our client. If it's not, they're not going to come back and they're not going to refer us. And that's ultimately what we want, is to not do one deal with somebody,
Right.
is to do 5 deals or 10 deals and build a relationship.
Well, and so often the person that needs private money, it's not because, oh my God, I've got myself in this horrible situation. Sometimes it is, but oftentimes it's, I'm a builder, I'm an investor, and there's only so much capital.
Yeah.
So, all right, I've used my capital on these 3 projects, so I've got this next project. I can put, 10% in, but I need 15%. Mark, can you give me that other 5%?
Yeah. Anybody who's run their own business, especially when you started off, has operated their business from their bank account. That's how you run a business when you start. You look at your bank account. If you have money in there, you can pay your bills. If you don't have money, you can't. It's that
Right.
simple. In real estate, it's such a cash-intensive business. You will always run into a problem down the road with cash because you didn't have a deal close, a deal came up that you love that you just aren't ready to buy yet. So having access to somebody that can give you money quickly is important, and that's why I got in the business.
And I think the latter is the one that happens so often. I've got this great, so I always, in business consulting, I tell people to always keep cash available. If you're a manufacturing company, somebody's going to go out of business and you're going to have that machine that you can pick up at auction for a song. Same thing in restaurants or anything else. In real estate, that's the name of the game.
Yeah.
How cheap can I pick it up? So if I can pick it up dirt cheap because it's distressed, whatever, and I can go to you and I pay a margin that I wouldn't pay to an institution, but I can't get that institution loan, I still have such a large spread. It's worth it to me, it's worth it to you, and now we're going to do the next deal and the next deal together.
The best deals I've ever got in business have always been quick. You've had to act quickly. And part of it's having the knowledge of what you're looking at and evaluating that. The other part of it is you have to have the capital to do it. And everybody, again, who's been in business for any extended period of time has had pinches in capital. Just it's part of business.
Yeah, any entrepreneur has had that issue. So talking about different deals, I know in deals we've done together, there's been different structures. You do something unique, and I really like this, and my clients have liked this. They'll say, I need this for 3 months, I'm in and out. And you say, okay, but let's structure this deal as a 6-month deal or a 12-month deal.
Yeah.
And if you pay me off in 3 months, you only have to pay X.
Yeah.
But if it goes to 6 months, you pay me X plus. If it goes to 12 months, you pay me X plus plus. And I'm expecting the 12 months. If you pay me back early, I'm happy, you're happy because you get to take that money and put it back on the street.
Sure.
They're happy because you gave them that reduction. You want to talk about that a little bit?
Yeah, so I again, back to the common sense portion of things, I look at things from if I don't have to have money out for 6 or 12 or 18 months, I really shouldn't charge as much. Because real estate's fluid, things change. So you might think a sale's going to happen in a month or two, and it takes longer. So we started a prepayment incentive. If somebody pays a loan off early, we give them incentive for doing that. We just rebate them some of their fees at closing. That way, if they need more time, the loan's there, and it's not a problem. But if they can turn it around quickly, they've got some financial gain. It gives
Right.
them an incentive to get that closed out. And it's worked out really well.
Well, and the interesting thing is throughout the years, I've seen private money lenders who have prepayment penalties.
Yeah.
Why? So you're
Yeah.
going, you want to keep cycling that money through. If you're telling somebody, if you bring me my money back to go back out on the street, I'm going to penalize you to do that. It makes
Yeah,
no
well,
sense whatsoever.
We've talked about this ad nauseum, right?
Right.
And it doesn't make any sense to me either. Again, if it's good for a client, it should be good for us.
Right.
And that's how you win. And we want to win.
All right, Mark. Well, thank you. Obviously, I think we keep coming back to the same point here. It's common sense lending. Really,
Yeah.
business is common sense, and that's the way you run your business.
Well, it's common sense. Look at us today. There was no memo when you have almost identical stuff on
Right.
today, right? So,
We've got the typical middle-aged guy uniform on today. So I like that. That's why I like pushing you out to my clients. But obviously, clients might see this and they'll go directly to you.
Absolutely. So it's Mark Abbruzzese, nextbridgefunding.com. My email is mark, M-A-R-K, at nextbridgefunding.com. Cell phone, you can call me directly, 734-417-1789.
All right. Thank you for sitting down with me today. I appreciate
Thanks for having
it.
me.
Hopefully, we'll have another deal for you soon.
Appreciate it.
All right.